Hi everybody, welcome to another update on the Gold Forecaster Index, the holy grail to predicting gold prices. In my last video, I said that the banking crisis led people to put their money into gold, and that's exactly what happened. Gold went up from below 2000 to above 2000. So let's see what is going to happen with our new data point, the gold forecaster index. And I am surprised. I am very surprised that we got a data point that's going negative. So actually gold is extremely strong because normally gold should decline when the index is negative. But instead gold is making new highs. So something is really wrong here. Maybe we are getting the same scenario here in 2008, where we get a massive drop in the index and then it shoots back higher. I think that's the case right here. And then you see that the blue line, which is gold, will eventually shoot higher and make new highs. So we could have a slingshot effect, and I think I know why. Because the deficit is in here. And we know that this is a trade balance. We know that the trade balance was around 100, what is it, 100 billion, and it has gone down to 60 billion. So probably base effects giving this decline, but that will eventually shoot back up when the base declines. Base effects are gone. So probably we will see this scenario where gold will shoot much higher. But yeah, it's something to consider. It's not positive. M2 is not rising, it's declining. Trade balance is improving. Capacity utilization is also not in inflation. So a lot of these leading indicators are negative right now. But okay. Here also going down, not good for gold. Misery index going down, not good. This needs to go up instead of down. Here, however, we have good data points. So the green line is the productivity and it's not good. So the green line is still above the black line. So there's a minus sign here. That means that we have bad productivity. Bad productivity typically gives us a lot of inflation. So a lot of CPI that will spike. So we are still in an inflationary period, which is good for gold. COMEX gold is still going up. That's a good sign. China gold demand was good. Still a lot of demand. Silver squeeze, I don't see any silver squeeze here. So this was a silver squeeze. It went up a lot. That's a PSLV. I don't see it yet. Maybe it will come. Premiums. Yeah, the premiums are coming later. This is just the COMEX for silver. Yeah, I added a new chart here. This is very important. You can see that central banks gold holdings are bottoming since the recession. So it's going higher and higher. As this goes higher, then gold will also move higher because those central banks will probably buy gold but never sell it again unless we are topping out in gold. So they are going to keep buying gold. So that's huge demand for gold and will probably move higher. US mint sales were very good. Last month in April, record highs for US mint sales. Silver, not so much. So I still prefer gold. Premiums, however, are very high, 90%. So yeah, there is a lot of interest now for silver in the US. Same for junk silver, still at high levels. So that's a very good sign. Chinese are not buying. So they are probably waiting for a dip. Same here for silver. The Chinese are not buying. So it's only the West that's buying gold and silver now. PSLV premiums were also negative still. On COT report, we are neutral, so it can go either way. Lease rates were very positive. For example, for gold, you can see here up, down, up, down, up, and then here up, down, up, down, up. So we expect gold to break out. Swiss franc very strong. That's a good sign for gold. Tips moving higher. That's also good. Real yields probably starting to move up again in April because bond yields have been falling. Seasonality is not that good for May and June, but you can see that gold is very strong. And then in July, August will start to move much higher. And here you can see that gold is still undervalued compared to currency in circulation. And stocks are going down to the blue line. This very important chart, watch for this bottom in 30-year to 10-year ratio, because if this goes up, and it seems that it is starting to move up, then gold will shoot higher. So yeah, it looks very good. I added also how to buy gold, Google Trends, and you can see that as this goes higher, then gold will go up. So there's interest for gold. Added another chart here, debt to GDP. We know that the debt ceiling is going to be breached in a few months. So debt will go up. GDP is now going down. We have a recession, so that means gold will rise because debt to GDP will rise. So I think it's looking very good for gold, and I have bought gold miners, especially when crude oil is going down. So this is not looking that bullish. So I have added more gold miners. On to central banks. They are still doing QT. So the balance sheets have gone back down. Deposits, let's check if those banks are losing deposits, and yes, they are losing. And of course, all that money will go to gold or under the mattress. And that's good for gold. Capacity utilization, well, actually, it went up. Yeah, capacity utilization actually went up. That's good for inflation. Yeah, there is some good news for gold. Then we had a rate hike yesterday, 25 basis points, which is very weird because the market says that there shouldn't be a rate hike. But anyway, the Fed hiked it, so we will see how this evolves. Normally, they should cut rates at some point. Trade deficits are shrinking. That's a good sign for the US dollar. I had hoped that they had more deficits, but it's actually improving. Here, trade deficits are improving. And we predicted that. If you watched my previous videos, I saw that based on the air freight prices, we would have less deficits because this was going up. Yeah, it's now starting to flatten, so I think deficits will stay at around 60 billion. But I would like to see this go back down at some point to become more bullish gold. Prices are down, that's not good. So inflation is declining a bit. Here as well, declining a bit. Import and exports. Okay, imports and exports were up, so that's good for GDP. Yeah. Now this is a new chart. Very interesting chart, the near-term forward spread. And when this goes below zero, then we typically have a recession. So a recession is coming. And you can also do this chart with gold. Each time that this happens, we have gold going up during a recession. So I think that we could break out to 2,500 because of this data point. So again, it's looking very good for gold. Let's talk a bit about oil. So oil has been going down. Now, when is it going to bottom out? And it's very easy to predict that. As oil goes down, the rig counts go down, as you can see here, because nobody wants to drill anymore with this low oil price. And there is some point here where the crude oil rigs will hit 500. And that's when we see production start to go negative. We are not there yet, but once you see this go to 500, then production will decline in the shale oil gas in the USA. Once that happens, then you can see here that oil will bottom out. So I would wait until data gives us a negative production growth. And then we go in oil because it's not looking good. On to copper. This is an interesting chart. You can see that the costs to mine it are going up. So that means that the price will probably also need to be higher. And gold is actually outperforming. So I'm actually more bullish in gold than copper based on this cost comparison. For copper, we can see that copper grades are going down and the production costs are going up. So I think it's looking good for copper. Here again, the debt ceiling will be breached somewhere in July, August. That's when gold will soar to the moon. So maybe in a few months, you can already buy gold right now in anticipation of this debt ceiling breach, which will be very positive for gold. Goldman Sachs targets $7 copper. I have yet to see this happen. We're still at 3.8, but I believe it. I think there's a lot of demand for copper due to EVs and electrification. So I do have some copper miners. And this is the reason. You can see that the amount of copper doubles in the EVs. If all these cars become EVs, then the demand for copper will double easily. The question is how fast will this transition happen? That I don't know, but I think it's looking great for copper. So that's all I have today. I'm bullish gold and copper. Less oil. Oil, we need to see it bottom out. I'm not sure when, but let's watch the rig counts and production. So I'll see you in the next video, and goodbye.